Hi there, you have tuned into Closing Trades on ET Now. I'm Shrishti Sharma and with me is Aisha Farizi. And what a day it has been for the markets because we're just building onto the gains and finally a good respite coming in for all the bulls out there. Even the breadth of the market has also improved throughout the day. And look at the move in India week, some signs of cool off, and we are now trying to drift below that 18 odd mark as well. But talking about Nifty 50, then we can't just take the eyes off the movement today. Almost 300 points gain is coming in on that particular index, but definitely the Nifty Bank is leading it from the front after scaling that 49,000 mark. We are just building onto the gains, and definitely all those large cap names are trading and bucking the trend. Definitely that push or finally some respite on the liquidity front coming in from the RBI. Stocks like Bajaj Finance, Shriram Finance, they are leading it from the front. Axis Bank, Bajaj Finserv are some of the top gainers. But in the last 1 hour or so, we have seen good moves on Cipla as well because the stock did come out with a great set of earnings. And what a surprise on the margin front versus an expectation of 25%. 28% is what the company clocked in, 3.5% gain coming in for Cipla. 3 p.m. is the press conference. Let's see whether or not there is any revision on the guidance by the management. But taking cues from that, stocks like Lupin are also seeing some bit of a recovery from the day's lowest point. Talking about some of the other movers, then definitely all these financials are doing well, but case in point being TVS Motors as well. That also did very well. Almost inline set of earnings, but no disappointment sometimes is also indeed a good news, and hence the move 5% uptick. But all in all, also have a look at Hyundai Motors as well, because just a while back the company did come out with the earnings and the revenue has seen almost a flattish growth on a YOY basis. 16,648 crores is what the company has reported, and the profit figure has been clocked at 1,161 crores. That's a fall of 19% on a YOY basis. So a decent set coming in from Hyundai Motors, but do note that there were no such great expectations given the decline in the volumes that we have seen on a YOY as well as on the sequential basis. But Aisha, indeed, what a recovery, and finally some bit of a respite for all the bulls out there.
Yeah, but I don't know how long it's going to sustain, because if you just were to look at the market breadth, just if we can bring up those advanced decline hands, yes, the Nifty is powering ahead by a good 1.25%, but has it undone the damage of even last week? The answer is no. And the breadth, if we can just bring up those hands for you, because you will see that they're getting a little bit conjoined from where they were just about an hour back as well. Now it's the declines which are taking over. That's the market breadth picture for you. So the pain still persists in the broader end of the market, and that really is the drawdown. But Kunal, what's today's bounce meaning to you?
I think it's a very strong indication of a long built-up formation. So, today being the, one of the days of the expiry week, crucial expiry week, the sentiment is completely different than what we saw in the morning. In the morning, there was a lot of selling across small caps and mid caps. You saw, many of the stocks falling down by a margin of 5%, 7%, 10% also. But then in the, throughout the session, what we saw was large cap names, and especially the banking stocks initially, which started to show signs of robust price action. So throughout the first couple of hours of the market correction, you saw the large cap banking names holding up quite strong. And then once the selling got over, you saw the larger cap names leading the charge from the front and then moving up higher further. That led to the confidence trickling back into the other larger cap stocks. So I think we are seeing a very strong classical recovery for the indices as well as large cap names. And I always believe that long build-up formations is much more stronger than short build-up because or short covering, because generally when you see short covering, it is typically tend to be an excessive amount of leverage which gets cut, but that doesn't mean that the sentiment would start to improve. Long build-up formations today on the larger cap names specifically indicates that the sentiment would start to improve going forward, and that could lead to market stability.
Okay, hoping for some stability. Let's bring on board Nishal Maheshwari, Naresh Mirani as well. Nishal, hi, afternoon. What's been your prognosis of the earnings so far, and anything that stood out for you?
Afternoon, Aisha. Thanks for having me. I think banks have stood out for me. Basically, I think some of the banks, especially the larger ones, HDFC, Kotak, I think they have come out with strong earnings. If you really look at it, I think the earnings have not been very disappointing. The only thing is basically the expectations were very high. And that's why I think you have seen basically even when you are giving good earnings like Dixon or today Keynes, the market is actually punished them. So that is a more of a problem, that the expectations are much higher. Otherwise, the companies have been reporting pretty good earnings.
All right, so companies have been reporting, so no major disappointment is what we are seeing from the earnings front. But yes, indeed, a lot of these earnings are trickling in. And one such stock is Cipla. We were just mentioning a while back that the stock is, after delivering a very good set by the company that's like a beat on all the parameters, the stock is inching higher with 3.5% gain. And why I'm highlighting this is that in the pharma space, in the major pharma company, Cipla always is the first one to come out with the earnings, and it does drive the major contribution from the US market. So whenever we get the results from Cipla, it actually changes the mood or sets the tone for all the pharma companies as well. And Kunal, I just wanted to have a chart check because we are just waiting for the management commentary. But meanwhile, a 3% move in Cipla, what does it mean for this particular stock? And also help us with your view on Lupin as well, because comparing both the companies, they have quite a similar product portfolio and similar geographies where they cater to.
So both of them are different charts. Cipla, for example, after this, trading or intraday up move for the stock, it looks like that the stock is trying to form a base 1400 mark. The stock has tested this level 3 times in the last 3 months or so. In the month of October, November is where the first time the stock had broken below the 1400 levels, and then recently twice is where the stock had fallen below the 1400 mark. So which means that this 1400 level should be a decent base building for Cipla over the very near term, and keeping that as maybe a positional kind of a stop loss. Traders could look at building up long positions over here. Lupin, on the other hand, I think the stock has still not formed a bottom, because it looks like that the stock today has given actually a sign of a breakdown, where it's managed to confirm a break below the swing low. Now on such days, it becomes very critical to observe the market reaction, especially for these kind of stocks which provide fresh legs of breakdown, because that could indicate that maybe it could be a sign of a false breakdown, or it could be a sign of impending reversal on the downside. So we'll maybe wait out for a couple of days more for Lupin to show signs of either bottoming out, or at least signs of further correction on the downside. 2075 could be a critical pivot point for Lupin. If the stock happens to come back above those levels, that's where traders could look at a fresh buy.
Okay, that's the take coming in on some of those F&O names within the pharma pack, of course. Bajaj Housing Finance, that came out with a good set of numbers. So that stock, of course, is holding out well still. There's Federal Bank, Union Bank, also some earnings reactions there. Railtel, that was a little bit disappointing as well. So look out for what all of these stocks do in trade. But Naresh, to you then, it clearly seems like it's financials and private banks. If they were to see a consistent move, perhaps we could undo a lot of those at least last 10-day damage on the index per se.
Absolutely. So financials continue to be the largest sectoral weight in the index. As such, always been about 30%. So if that's the sector which has taken lead, and also the fact the sector has done underperformance over the last 2 years, last 3 years, even 4 years. So that could change going forward. And we've held on to the recent lows, almost a double bottom there. So looks promising, and names like Kotak Bank, HDFC Bank could eventually set up for a move towards their 52-week highs. So positive on banks as such, and that makes it more positive on the index as well.
All right. Okay, let's take a very quick break with news that we're holding at the highest point in the day, at least for the index. The breadth, of course, is getting a little wobbly, but it's really a large cap-led recovery that one is seeing, and we've conquered the 23,100 print for the index led by the Nifty Bank. We'll take a quick break, come right back for more.
Exchange partner BSE, the power of vibrant.
Our markets definitely are rebounding. It's important to keep a close eye on what the global markets have been doing, because remember, yesterday's carnage can solely be blamed on DeepSeek and the kind of global routes that we saw fueled by the China AI concerns. Today, of course, there's some bit of reprieve there. So marginally higher. I can't say it's a runaway move of any sorts, at least for the European markets. And the pre-market US futures, though, are making a comeback. Still not undoing yesterday's damage alone, but about a 0.5% uptick is what the Nasdaq futures are sitting on. S&P is up in the green mildly, and it's flat for the Dow futures right now. So definitely the selling is abated from what we saw yesterday. But the legal trouble mounts for OpenAI as Indian media giants have now piled up lawsuits against the AI company. Sumita, in fact, my colleague, is here to tell us through what these allegations have been, what is it that they're saying about the company, and what the companies have actually said in their response. That's AI or OpenAI.
Yes, in fact, leading Indian media outlets are all set to join proceedings against OpenAI. Why? Well, these companies are accusing the ChatGPT creator of using their copyrighted content without permissions. So there are a whole host of allegations that these Digital News Publishers Association have mentioned in the application that they have filed. They claim that their news websites are being scraped to store and reproduce their work for OpenAI users. They also claim there is content adaptation being done by OpenAI, that AI models are trained on vast quantities of copyrighted works, and that too without a license, and hence it violates copyrights of Indian digital news publishers. They also claim that there is supercharging of online misinformation. Now remember, this follows after the first case against ChatGPT in India was filed by news agency ANI. And remember, ever since ChatGPT became big, the big concern has always been raised around copyrighted content and how that will be handled by the company, and which is why there have been similar global lawsuits, for example, by the New York Times, the Denver Post, the Chicago Tribune as well, and on issues of copyright protection. Now, OpenAI in its defense has issued a statement, and it says, and I quote, "We take great care in our products and design processes to support news organizations. We are actively engaged in constructive partnerships and conversations with many news organizations around the world, including India, to explore opportunities and work collaboratively." Now, OpenAI also says that there is potential of AI to enhance the overall news experience. They're building AI models using publicly available data, and that their models are widely accepted by legal proceedings. Now, very important to note that the outcome of this lawsuit could have significant implications for AI firms, which could face stricter regulations on how they source and use content, and it could eventually end up impacting their business models as well.
Right. Nishal, come in on this entire IT rout which is currently taking place. Of course, there is that collateral damage when you have the Nasdaq itself falling about 800 points on the futures last evening to the kind of 3% cut that was handed over to us. That rubbing off on IT stocks back home is one story. But is there really sense in, the panic that we saw in the IT names? Or would you say, wait for the dust to settle down, let's try and see what the implication of the Chinese AI, models is going to be on Indian IT services players?
That is for me.
Right, Nishal, for you. Yes, Nishal, that's for you.
So I think it's too early to say, Aisha, as yet, basically, that what kind of implication is going to have. But one thing is there, if some of the companies who were building at least in the 25 or 20 in 26, large orders coming from AI, especially the tech giants, I think that is now coming under question. So the capex, which was likely to happen in the US, that is coming under question, and that's why we're seeing this kind of problems in the US and Nasdaq. So I'm saying it's too early to say, but definitely there is a question mark about the big capex which is likely to happen, and subsequently the orders out of it. So I think there has to be some caution as far as Indian IT is concerned.
All right, that's the take on the kind of sell-off that we are seeing in all these tech majors globally, of course. But on this particular topic, we also spoke with Ray Wang, principal analyst and founder at Constellation Research. Let's go across and listen into him.
There is some work that's going on from some of the people that we're talking to here at Stanford and some of the universities that maybe a lot of this was stolen from OpenAI. Some of this was stolen from other places that's going on. So we're trying to figure this out. But it's basically a fundamental disruption. It's like the same disruption India has with UPI, because UPI is $0 for a transaction versus $25 in the US for a wire or $1.50 for an ACH transaction. This is the equivalent. If we can get AI down to this pricing, then everybody will be reworking their CapEx models. But the challenge isn't that. The challenge is, can China get to Gen AI? And can China get to, general artificial intelligence as well? And if they do get to that, then that's going to be an interesting war. But there is a shot fired. This is basically what people call Sputnik moment. A war has been declared, and we're going to have to see what the race looks like at the first AI Cold War begins. I think what's lacking is really the investment and the CapEx to build the data centers, to be able to do these AI models. And I think the second piece is really the ability to actually get the large tech giants to actually make those investments in India to support a sovereign AI or to support multiple private AI models.
All right, but moving on back to the equity markets then, let's have a look at Nifty as well as Bank Nifty, because we are off the day's highest point. And just when we started the show, Aisha was just mentioning that whether or not we hold on to such gains is something that is still doubtful. And look at the move, because in the past 15 minutes or so, Nifty has lost almost like more than 70 odd points, and Nifty Bank has now slipped below that 49,000 mark as well. But once its stock in focus is Bajaj Finance, all set to report its quarterly results. But what is the street penciling in? Let's go across to Varun to find out all those details. Varun.
So, well, we are expecting a decent quarter from Bajaj Finance, wherein the net interest income is expected to grow by around 22%, and the pre-provisioning operating profit is expected to grow by around 26%. The profits will grow by around 16.2%, and it is expected to come at around 4,227 crores. Now, the company has given the quarterly updates in the start of the month, wherein the company has said that the company has recorded highest ever quarterly increase in its customer franchise, and also the new loans that the company has booked was highest ever loan booked. Also, the asset under management has actually grown by around 28%, which the company has said, although the growth was at 7 quarters low, but was within the guidance of the company has given from 25 to 27%. The deposit growth, that was around 19%, and even that was at multi-year low. And that's the reason the overall growth, what we are expecting, is a tad bit lower than what the company used to deliver in previous past. But yes, keep an eye on NIMs and spreads, which are expected to be stable quarter on quarter. The overall borrowing cost, even that has bottomed out. But yes, look at the credit cost, because that is expected to increase a bit, and also look at the gross NPS number, because some analysts on the street are expecting that the gross NPS number would slightly increase. So that is one thing that you need to keep an eye on. Otherwise, if you look, it's a decent set of number which the company should, give this time.
Right, okay, not just Bajaj Finance, but it's going to be a very auto-heavy day as well come tomorrow. And you've got Tata Motors, Maruti, Shrishti, both delivering their numbers. Quickly tell us, what are we penciling in from them?
So, Aisha, we are expecting good set of numbers actually from both the companies. Firstly, let's talk about Maruti Suzuki, because there we are expecting a double-digit growth on the numbers front, be it revenue, EBITDA, or as well as profit for that matter, because the company did register 13% jump in their volumes in Q3. Other than that, the input cost seems to be stabilizing, and the average realization has also inched up almost 4.5%. So, all in all, a good set expected from Maruti Suzuki. On to the bottom line, 3,624 crores is what we are penciling in. But definitely the key to watch out will be the margin number, because this time do remember that because of the new launch pipeline, the marketing spend was actually higher. The discounts were at the elevated levels to push out the inventory at the year end. And on the margin front, all these factors will impact at 11.7% is what we are expecting. Talking about Tata Motors, definitely the silver lining will be the commentary on the JLR, and that will be the key to watch out for, because do remember, just in the last quarter, the volumes improved significantly for Tata Motors JLR division, because back in Q2, the company did highlight some of the disruptions, supply-related disruptions happening, which impacted the volume. So a strong rebound there can actually help the numbers. Other than that, the India business, not much expectations there because the volumes were just flat on a YY basis, but CV margins are expected to support and expected to do better on a YY basis. Here too, the margins expected at 13.6% on the consolidated basis. But do remember, for Tata Motors, the correction that we have seen in the stock happening, one of the key concerns has been that on a full year basis, will the management be able to go ahead and actually obey, or rather perform on their JLR EBIT margin guidance? There were some doubts regarding that. So any positive commentary on that front or any fresh comments on that front will be the key to watch out for when it comes to Tata Motors.
Okay, Tata Motors, Maruti, both on our radar. Nishal, but another big event, other than, of course, expiry and the Fed meet as well. What is it that the markets are anticipating from the budget this Saturday?
So I think two things basically the market is expecting. One is some sort of a policy where some money is put into the hands of the middle class. I think maybe a tax cut is the only possible way which I see forward, basically, so that the consumption side, which has become very weak, especially on the urban side, that gets a fillip. The second thing is regarding as far as the growth in the economy is concerned. So I think the other expectation is basically continuation of investment into the capex side. So these are the two main things basically the market is expecting. One is trying to get a fillip for the consumption, and the second is the if the government continues with the capex mode. Last budget they had outlined, I think, 15 lakh crores, but I think only around 11 lakh crores got spent. So we have to see whether government upset or maintain the 15 lakh crore kind of a number, because I think that's going to be a solid boost to the economy again.
Nishal, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us on various sectors, your market outlook, and also what are you expecting from the budget 2025. But with this fears, it's now time to slip into a very short break. Don't go anywhere. We'll be right back.
Can someone working alone solve all the world's biggest challenges?
110 odd points up in the green as we speak right now, while Bajaj Finance, Axis Bank, Shriram Finance, it's really a financials and banks led move today. HDFC Bank still holding up 2.5%. But look at Sun Pharma, look at Hindalco, Britannia, BEL, L&T, Wipro. These are all stocks which continues to linger and weigh in heavy on the markets. But let's get you an ET Now exclusive, and the government, we understand, is likely to prioritize the listing of Coal India subsidiaries in FY26. My colleague Prakash Priyadarshi is here to get us more exclusive details on this likely government push for the listings.
Yes, we are learning from our sources that the government is likely to prioritize the listing of Coal India subsidiaries in FY26. In fact, it's part of the government's newest strategy to list non-core assets and subsidiaries of PSUs. We are given to understand that the DIPAM will push for the listing of at least one subsidiary in the next financial year. And CMPDI is likely to be the first subsidiary to be listed on exchanges. Along with that, the process has already been initiated by the company, but the sources are also confirming that a sufficient gap will be maintained between the listing of two subsidiaries to ensure a better market appetite. The listing proposal has already been approved by the Ministry of Coal as a nodal ministry, and DIPAM as well. In fact, Coal Ministry want the listing process to be completed in FY26. The process has been initiated, and we are learning from our sources that the DIPAM will prioritize the listing of Coal India subsidiaries in FY26.
we're hoping to receive the approvals for some of the products that we'd spoken to you about before. From an environmental perspective, Cipla has improved its scoring on the DJSI index. We're now at 79. And we will continue to foster and work towards making sure that the planet is a lot more healthier than from how we inherited it. With that, maybe I can take some questions, and happy to have a discussion with most of you. Thank you very much.
Thank you, Umang. We will now move on to the question and answer session. Those who have questions, please submit them in the Q&A box at the bottom of your Zoom screen. Your name will be called out to interact with Umang. The participant whose name is called out will be temporarily assigned as a panelist, which will allow them to turn on their video and audio to ask Umang their questions. We would request that you turn on your camera if possible while asking the question. Please note, when you're being assigned as a panelist, you will see your screen refresh. This will take only a few seconds. We request that you limit your questions to 1 to 2. This will allow us to accommodate more attendees to interact with Umang within the stipulated time. Also, in case we receive the same question from multiple participants, we will only unmute the participant who submitted the question first to avoid repetition. Thank you for your patience and understanding. Over to you, April.
Thank you. Hello, everybody. The first question is from Vinny Motiwala from CNBC. Vinny, I'll be promoting you to panelist.
All right, so that was the management of Cipla talking on the earnings. We'll wait for more commentaries. But yes, back home, there's been a bit of a pressure from those higher points, and we are sub below that 23,000 mark on Nifty 50, and a bit of a sell-off also trickling in when it comes to the Nifty Bank Index. Other than the pharma space that we have been just tracking, it's from the auto pack, it's stocks like Tata Motors and Maruti that are in focus. But just a chart check on Tata Motors. Kunal, if you can help us. The 2% move, or finally that 2% rebound, what we are seeing in Tata Motors, what does it mean for the stock price? Because from those levels of above that 1,000, see where Tata Motors is right now.
Yeah, it's gone through a very sharp correction. I think that's one of the reasons why the auto stocks and the auto index has also fallen very sharply, where from 1160 or 70 thereabouts for Tata Motors, the stock I think had come down to 700, 710 odd mark. But it looks like that the stock is now trying to form a base or a bottom, just around the 700 levels, because the pace of sell-off or the intensity of the correction for Tata Motors has halted. There is no major incremental damage to the stock price. Yes, it's been making new lows when you look at this on a relative basis, but then when you compare this with the intensity of the price is making new lows, the price correction has been a bit more shallow in the last 2 months. In the month of November, the stock had formed a low around the 770 mark. In the month of December, the low for the stock was around 725, and the recent low was around 710. So as you can see, that the pace of making new lows for the stock is dropping down significantly. That could probably be an indication that the stock is bound to get into a consolidation. So I think 700 could be a good zone where traders could look at a contra buy on Tata Motors.
Okay, a contra buy on Tata Motors is what could be looked at. But just want to mark, what else has been cooling off right now. Look at JSW Energy, that's fallen about almost 5%. PB Fintech is down 3.25%. Lupin, Syngene, these are all names which are seeing quite a bit of cool off. There's of course, Paytm, which is down about almost 1.25%. L&T is the laggard today. And these IT names as well are, now drifting into the red. TCS2 is now getting a little bit soft. ICICI Lombard, Coal India, Eicher, Max Healthcare, these are some of your significant losers as we speak right now. And within the Nifty as well, there's also been, a Britannia, there's been a BEL, Hindalco, Wipro, DRL, these have all been pressure points. L&T, and I just want to bring up the intraday graph as well for you, because that stock has taken quite a bit of knock. It's now down almost about 1.5%, and a sudden tumble is what you've seen. The global screen looks okay because Europe is still holding out in the green, as are the US futures. So don't see like this is any global-led move. In fact, if nothing, Europe has actually put on weight. We're now staring at almost a 100-point move on the DAX. 0.5% higher for Stock 600. FTSE as well started off just about mildly in the positive, but it's actually picked up in trade since then. But India is the market which is cooling off and cooling off quite steadily and fast. Kunal, what is this? I mean, is this just the run up to the expiry, and which is why we are seeing these kind of jitters? Is it the budget? What could be the reason?
So it's a mix of that, Aisha, and I think predominantly, the move which happened today on the markets, a 1,000-point move on the Bank Nifty. I think there's bound to be a point where traders would want to take out profits because, going into the event, going into the expiry, they would want to be as light as possible. Because I think the real move for the markets would really start off post-budget, because once the event is out of the way, the IVs generally they come down significantly, and once that happens, the move for the indices in whichever direction the market moves post the budget, they would get a lot more stability, and there could be a lot of trend. So what we are seeing is a rally, a move of short covering led by the stocks which are beaten down significantly, as well as long built-up formations. But the real move in terms of trending would probably start off post the two major events which could be out of the way.
All right, that's the take on the index level. But with this, let's also welcome Sunil Subramaniam, who is joining us right now. Hi, Sunil. Good afternoon. Help us with your understanding, the kind of rebound that we are seeing on the markets today. What is your sense that there could be some more pain that could be in for store, or this recovery has just started for the Indian benchmark indices, at least for now to start with, and maybe we could be in for some pre-budget rally as well?
I'm not so sure about that. I think that the bounce today that you saw was probably some value buying from the domestic institutional. I think I saw that they are sitting on quite a bit of cash. And in fact, over the last 2 days, they've been booking profits on mid and small cap. That's why you see the fall in the mid and small caps has been over the last few days much more than in the large cap. So I think this increasing cash allocation in the domestic space is probably getting deployed into specific large caps where the correction, they feel, has brought it down to a reasonable valuation level. So this is more of I wouldn't call it bottom fishing, but buying some stocks on the downtrend. And I think the real deployment of cash will happen only after the two events, which is the budget as well as the RBI policy to follow soon thereafter. Of course, on the 31st, we'll have the economic survey come out, which will give you a sense. And paradoxically, what will happen is that a slowdown, if it's confirmed by the economic survey, to that extent, the chances of an RBI rate cut go up. So which will be positive for rates in sensitives and the banks and all of that. So I think some of the buying in the banks I would attribute to that they're seeing that the earnings season is reflecting the fact of the slowdown. And so better chances of a rate cut, and so some number of buying into that. So this is just like I said, very selective buying in places where the correction has happened. I wouldn't call it a bounce back on a sustained level yet.
Yeah, doesn't seem to be the case because it's getting pretty slippery, and I think today's uptick was just used as an opportunity to sell into. But Sunil, once the dust settles down, do you think there are pockets in the market which have now become a value buy?
See, value is a very relative term. So if you see the mid and small caps are trading at a 50% plus on a valuation above the large caps. So clearly the whole large cap space, I would say relatively is a value buy. The second aspect here is that I think consumption, because FMCG valuations look very high purely on a PE basis, but they are traditionally a high valued sector. And relative to that, over the last year, that's been a sector which has not performed. Whereas in the budget, I expect the government to put more effort around, say, increasing the tax, bottom line of the tax so that more people don't pay tax. They will also put some money down to the bottom of the pyramid. So I think consumption at the mass end should get a boost. And so I think it's a safer play to buy into the consumption space today because the downside is not much. And if the budget really turns out to be a little more populist, those stocks and those sectors could see a rally. So I think to me, banking and consumption, banking because, as I said, slowdown the economy is indicating that there could be a rate cut possibility definitely from RBI. So I think these two sectors which haven't performed, if you see the last 1 year returns, both these have been laggards compared to the broader market. So that's the space I would say, if at all any buying can occur today, there's a downside margin of safety at the bottom. And if some positive triggers come through in the two events, then there could be a rally there.
All right, that's the take on the financials. But meanwhile, we also have the JSW Infra numbers as well, when the profit has seen a jump of almost 32% on a YY basis. EBITDA saw a growth of 22%, but it's the margins that has taken a bit of a hit. 151 basis points of decline and 49.5% is what the company clocked in. But Kunal, if you can help us with a chart check on JSW Infra, because this stock has also been a good mover of late, good mover in the past 2 to 3 years, but off late, obviously, that volatility kicking in. So 262 levels, where do you see this headed?
It's a good chart. As you rightly said, from I think 150 levels a couple of years back, the stock had moved up to 350 kind of a zone. I haven't been tracking the stock very closely, but then just looking at the charts over the last 4-5 weeks, and this week specifically, the stock forming a candlestick, a doji candlestick pattern indicates that maybe we could be at a point where the stock would have formed a major bottom for itself, hitting that level of 250 to 51 for JSW Infra. So I believe keeping that as maybe a short-term stop loss, traders could look at a contra buy for the stock over the near term, expecting the stock to close the gap at least, which was created in the last 2 weeks, and that could be closer to 275 to 285 levels.
275 to 285 is something that Kunal is expecting when it comes to JSW Infra, closing the gap off late. But today, real estate counters are also having a good day, because in Nifty 500, we are seeing stocks like Shobha that are holding on to the gains of almost 8%. And the index overall is seen a gain of more than 2% the last time I checked. But Naresh, specifically on Shobha, the stock has also been very volatile. We have seen those pressures trickling in from higher levels, but 8% jump and now inching to the 9% move at the day's highest point. Where do you see the stock headed?
Almost a 40% correction from 2100 all the way down to 1150 odd levels. And now yesterday also tried to make bounce back today also. So we are trying to form a base formation around that 1100, 1150 mark. Closer to 1400 would be a tough area, 1400, 1450. Post that, whenever it dips back to 1200 odd levels, that would be a buying opportunity. So for now, wait it out and wait for another dip.
All right. That's the take on Shobha Developers. But meanwhile, we were just trying to listen to the Cipla management, and it's a very important commentary coming in where Umang Vora, who is the MD of Cipla, does say that these margins of 28% that has been clocked in Q2, they are not sustainable. End of the year or more, they have guided for the full year of the margin, and 28% is definitely higher than that. But the management is saying that what they have clocked in Q3 that are not sustainable, and other than that, supply issues for lanreotide should ease by Q1. This is one of the key drugs when it comes to Cipla, and hence that pressure from those higher levels is what we are seeing on the stock price. But for this, let's move on and let's also start taking the BTST ideas from both of our experts. And Kunal, help us, what's on your list?
So I'll go with 2 buy calls. Tata Steel is the first stock which I would suggest as a buy, more of a contra buy. The stock looks like to be in a zone where a near-term bottom could be at place. Candlestick patterns, volumes indicate a potential turnaround for the stock. So betting on Tata Steel, targets of 136, stop loss at 126. And the second would be a buy on HDFC Life. The gap which was created on the stock, in an up gap, that gap has been filled, and the stock has come back to the retest of the 600 levels. So keeping 600 as a low would be bullish on HDFC Life for a near-term target of 634.
Okay, that's a buy on HDFC Life. You know what? Let's quickly cut across, and Umang Vora is currently addressing the media and briefing the analyst fraternity on the Cipla numbers. Let's listen in.
To be able to launch it towards the end of the second half of next year. That is the outer limit that we think Abraxane could be launched. And at where I think we're about filing the data from our facility in the US. So, it depends on the clock that the agency sets, but could be from there, could be 6 to 9 months. The facility will be inspected, and it will be about 6 to 9 months from there.
Varun has also asked if we will revise our guidance, especially on margins.
Yeah, so just on guidance, I did mention that, with the quarter remaining, we're not going to revise anything. We're just saying that we're going to exceed the guidance range. That was an answer I had given right at the beginning of the call. So, yeah, we will be exceeding our guidance range.
He's also asked one last question. How big is the GLP-1 opportunity, and is the company doing any in-licensing with Eli Lilly?
Well, the thing with the GLP-1 category is that it's very difficult to estimate demand for it. And that's largely been the experience that people have seen in the West. I do believe that the category in India is also going to be very large. And I think as more and more, we've seen this trend post-COVID where people are making healthy choices, and weight is definitely a big choice in how they will live their life. So I do think it's a big opportunity. Our Eli Lilly is a great partner for us. And as and when they deem appropriate that they do need a partner, I think Cipla is always available to be their partner.
I think that was our last question for the day. And that concludes our press briefing for today. Thank you everyone for joining us. Thank you, Umang, for patiently answering the questions asked.
All right, so that was the management of Cipla. Very important commentary coming in where they're saying that for the full year of FY25, the company will be exceeding their margin guidance going forward. And that is the case in being because 28% is what the company has clocked in for now is definitely a big surprise from the company. But with this, let's move on. And before we shut shop for the day, Naresh, help us with your BTST trades.
So first should be one Union Bank of India, good price volume action today. Stop loss at 109, target price of 116. Series of plan Industars, the stock has come back to the retest and is bouncing from that 345, 350 mark. Stop loss at 350, target price of 365.
Industars is something that Naresh is tracking. 365 is something that he's working with. But today, if we talk about some of the auto names, definitely we did discuss about Tata Motors and Maruti as well. But other than that, TVS Motors from the two-wheeler pack clocked in a very good set of numbers, a 5% jump. And the stock is seen to be sustaining those high levels. Even Balakrishna Industries, some of the analysts just believe that the worst seem to be behind for the company. And there has been a great coming in today as well. 5% jump, and the stock is seen to be sustaining those gains and those early morning gains as well. But Sunil, if you can help us with your expectations from the auto pack given the sell-off, and what do you make of the auto sector as a whole, and at this price point, any particular segment that you are betting big on?
So I think that auto is a good space post the corrections to buy because one, it's a rate sensitive. It's the ultimate rate sensitive. So like I said, I think the build-up for the RBI policy is turning positive. So I think auto as a pack, if there's any good news on the rate cut front, auto as a pack should rally. So that's a good one. The second aspect there, which I would like to focus on is, one is, I think, auto components. I think the export story has been very good. And I think increasingly you will find it's not necessarily to the US, but to the other emerging countries, I see a good future for that. So auto components are a big pick for me. The other aspect is I would still go slow on the heavy commercial vehicles and that segment and the tractor segment because we are nowhere close to a monsoon-related rally. But on the car space, right, the SUVs, I think the K-shaped recovery will sustain for some time. So the high-end SUVs and those and EV, obviously this year I think EVs will show. There's a lot of capacity creation happen there. There'll be a massive push as we saw in the Auto Expo also on new EV launches. So I will be positive on the EV space within the car segment.
Sunil, what's the anticipation that the market has from the budget on Saturday?
I think finally the government has to focus on getting money to the bottom of the pyramid. I think that's very clear. And so to me, I expect that there is enough room within the fiscal space for the government to allocate to revenue and stuff which trickles down to the mass. So whether it's a tax rate cut or increasing the slabs, where the tax-free levels are there, that's one positive we expect in the budget. The second is some diversion from the capex side on two parts. One is you actually take money off capex and put it down the revenue stream. Rating engines may not like it, but you've got to drive a balance. The second is even within capex, the developmental capex that they do, they should do it in areas where the money trickles down to the mid and small enterprises and to the thing, because labor creation happens only at that space. So I think employment generation plus getting money down to the bottom, these are the two areas where we will look in the budget speech for those triggers. And if they come through, then we could see a post-budget rally.
And no wonder then, Sunil, that right now, maybe and especially given the, under ownership within FMCG, a slight nibble into the sector would be beneficiary. And one can see that, tilt in the market already.
Yes, I think that's sustainable, because the other aspect there is that, people have been putting off buying, because of consumer sentiment. And I think the budget could prove that kind of a trigger there. And hence, I mentioned that consumer staples is something, and there's a margin of safety there, because they've already not really performed over the last 1 year. So you're not going to take much of a risk there. So I think domestic institutional investors will definitely start accumulating on that space in the coming weeks.
Okay, Sunil, great to have you on the show. Kunal, Naresh, we'll let you guys go on that note as well. And I'm going to hand it over to Ashesha for the closing trades.
Well, yes, ending the day in the green, but we gave up significantly from the highest point of the day. Nifty ending the day in the green, of course, with a surge of nearly 130 odd points, 965 or 980 thereabouts. This is where we are ending for the day. Nifty Bank, of course, was the shining star in today's trading session. Nifty Bank outperforming in trade today, 1.5% higher at that 48,850 odd mark. A whole host of banking and financial stocks were gaining in trade today. Some of the top losers on the Nifty 50 index were all banking and financial stocks. We had Bajaj Finance, which was up 4.3%, Axis Bank up 4%, Shriram Finance up 4%, Bajaj Finserv, HDFC Bank, all of them from the banking and financial services pack, some of the top gainers on the Nifty 50 index. Pharma stocks, meanwhile, were under acute pressure today. Nifty Pharma index was the biggest sectoral loser. We had Granules, which was down 5%, Sun Pharma down 4.5%, Ipca, Laurus Labs, Ajanta Pharma, all of these stocks were under pressure today. On the gaining side, though, we had Nifty Real Estate Index, which was gaining in trade today, the biggest sectoral gainer. Sobha, in fact, was up 9%. DLF, GCPL, Lodha or Macrotech Developers, all of them gaining anywhere between 2 to 5% in trade today. PSU banks, much like other banking and financial services stocks, were gaining in trade today. Bank of India was the biggest gainer from the PSU banking index, up 6%. We had Union Bank, which was up 6%, Punjab National Bank, Punjab and Sindh Bank. Both of these stocks from the banking sector, from the PSU banking sector, were gaining nearly 3 to 4% in today's trading session. Union Bank for you on your screen, up 4.5%, and we had PNB and PSB also gaining in trade today. In terms of individual earnings reaction that we saw today, TTK Prestige, which was down 8% after it reported very weak set of numbers. Revenues were down 1.5%. Margins contracted by about 60 basis points to 10.9%. TTK Prestige ending the day 9% lower. TVS Motor, meanwhile, on the back of strong set of numbers that it reported, ending the day with a surge of nearly 4.5 to 5%. Revenues were up 10% YOY. Margins expanded to 11.9% versus 11.2% that the company had reported same time last year. EBITDA also expanded significantly. So very strong set of numbers there. TVS Motor up over 5%. Balkrishna Industries, a couple of other stocks which were reacting to brokerage reports that came in today morning. Nomura came out with a report where they upgraded the rating to buy from neutral. The revised target price at 3,242, where they believe that valuations are attractive. They say that the target price of 10% for global versus 6 to 7% now. So very positive brokerage report that came in on Balkrishna Industries, 7% higher on that one. Petronet LNG, where Citi opened a 90-day negative catalyst watch, was declining on the back of this report, ending the day 7% lower. So a whole host of stocks which were reacting to its earnings, but all in all turned out to be a good day. We did recover from the highest point of the day, but ending the day at about 22,980 odd mark. That's all the time we have on this edition of the show, but you don't go anywhere. Stay tuned to ET Now.
Presented by SBI, the banker to every Indian. Co-presented by SBI Life. अपने लिए अपनों के लिए. Co-powered by